Hey everybody. Today I'm going to talk about the student loan forgiveness program. Some of you have some additional questions about the different programs you may qualify for. So I decided to do a brief presentation. It should be less than 15 minutes about the different options and some of the requirements of the programs that are out there for student loan forgiveness. Most of you already know me. My name is Shaka. I'm a realtor, a loan broker, and a credit expert. I'm based in the Metro Memphis, Tennessee area. I own a company called the Credit Godmother, and we specialize in helping people repair, rebuild, and improve their credit. I wanted to focus on what I have found as a major problem in our community, and that is many people are being held back by their student loan debt. Some background about student loans. The federal government began guaranteeing student loans provided by banks and nonprofit lenders in 1965. They created a program that is now called the Federal Family Education Loan, FFEL program. The first federal student loans, however, provided under the National Defense Education Act of 1958 were direct loans capitalized with U.S. Treasury funds, following a recommendation of economist Milton Friedman. But when Congress wanted to expand on that start, budget rules made the guarantee approach seem more attractive. Today, this system of guaranteed student loans has been entirely replaced, and all new loans are issued directly by the Department of Education. So, some experts have said that the government is to blame for high college costs because they funnel so much money, guaranteed money, into this program that colleges began to raise their cost of attendance. The increase in price did not match with the increase in salaries that people were earning once they received these degrees. The more money the federal government pumped into financial aid, the more colleges charged for tuition. Inflation adjusted tuition and fees have tripled over those same 30 years, while aid quadrupled. The aid is going up faster than the tuition. Thanks to the federal government, massive sums of money are available to pay for massive tuitions. How many Americans have student loan debt? About 42.9 million Americans have federal student loans, according to the most recent data from the U.S. Department of Education. That means about 1 in 8 people in the United States carry student loan debt, per an analysis of census data. Total outstanding student loan debt is 1.59 trillion, according to second quarter of 2021 data from the federal government. Private student loan debt comprises around 7.89% of that total, or around 1.728 billion, according to 2021 data from Measure One, a higher education data and analytics firm. So, how does student loan debt affect you? Student loan debt is a burden in several ways. It increases your debt to income ratio, which directly reduces or impacts the amount of home loan for which you may qualify. It reduces the amount you can afford to borrow to invest in business or other income producing assets you may qualify for. And it reduces the amount of income that can be saved or invested to build wealth. So, student loans can impact your life well after you completed college. It impacts your ability to buy a home, causes more people, statistically, this has been proven, that more people are still living at home with their parents even after they've completed college. It lowers your net worth. You have to put your dreams on hold, lowers your credit score. It doesn't go away. It can disqualify you from a job, and it can cause your tax refunds or your bank account to be seized. Okay, what are your options to get rid of student debt? Is there anything that can be done to eliminate the enormous burden of student loan debt? Some viable options are, unfortunately, death. If you die and you owe federal student loans, they will not go after your estate. However, some private student loan lenders will go after your estate. You can change your identity, which is not really a a viable option. It's very hard to do, change your identity. You can pay the student loans. A lot of people can't afford to do that on the amount of money they earn at their employment. You can file bankruptcy in certain limited cases. Student loans can be discharged in bankruptcy, but it doesn't happen that often. You know, you have to in order to be successful, most student loan borrowers have to show that they have an undue hardship, which is challenging to prove legally. Also, some of the options are for deferment or forbearance, which doesn't eliminate the student loan debt. It just postpones you having to make a payment, and or you can apply for student loan forgiveness. And today, that's what we're going to mostly focus on. Okay, the five best options to have your loans forgiven or discharged are the total permanent disability discharge, public service loan forgiveness programs, closed school discharge, false certification discharge, borrower's defense to repayment. And we're going to talk about these options today. Okay, for total and permanent disability discharge, this program provides student loan forgiveness to federal loan borrowers who are unable to maintain substantial gainful employment due to physical or psychological medical impairment. Okay, so a lot of people think that you have to be totally, completely disabled in order to apply for this. Actually, that's not true. You can not even be eligible to receive Social Security benefits and still qualify for this program. However, you do have to get a medical professional to certify that you are unable to engage in substantial and gainful employment. And that is, you know, that's not really difficult to prove. However, for, you know, most people, you have to prove that you're not able to earn less than more than a certain amount of money. For 2020, that amount was 1260 per month. If you're able to earn more than that amount, then you're no longer considered disabled, regardless of your medical condition, and your benefits um, for this program, you wouldn't qualify for this program. Okay, another program is the closed school discharge. If your school closes while you are enrolled or soon after you withdraw, you may be eligible for discharge of your federal student loan. Loan discharge is the removal of your obligation to repay your loan under certain circumstances. Some of the schools, I can give you some of the schools you've probably seen them advertising on television. Most of them were for-profit institutions. There are many more listed on studentaid.gov, the government's website for financial aid. But some of the schools were ITT Tech, L'École Culinaire, ICDC, Everest College, Corinthian College, Concordia College, and Argosy University. The false certification discharge. A false certification cancellation, also known as discharge, is available when a school falsely certifies that a borrower's where they falsely certify a borrower's eligibility for federal aid. If the false certification discharge is granted, you are no longer obligated to repay the loan or any charges or costs associated with the loan. So, you know, to be eligible for this type of discharge, you would have to be able to prove that the school pretty much lied about your ability to or your ability to benefit from the program. So it says, for example, if you did not have a high school diploma or a GED when you went to the school had the responsibility to make sure you could benefit from the educational program. And they usually do this by giving you an exam. This is called an ability to benefit exam. You can get the loan discharged if there were serious problems with the exam, including problems with the way it was administered, or if the school did not use an approved exam or failed to give an exam. The Department of Education considers the following examples to be proof of ability to benefit falsification. These are examples only, not a complete list of criteria. Okay, so if you were not, if you did not have a high school diploma and the school admitted you and you received student loans to attend this university, and the school did not give you a test to test your ability to benefit from their program, then you could possibly be eligible for a false certification discharge. But again, the examples are A test requiring an independent test administrator was not properly administered. The school allowed a student to take the test earlier than the minimum prescribed waiting period or more frequently than allowed. So if you weren't able to pass the test and they let you take the test again and they didn't make you wait the appropriate amount of time, then you may be eligible for this type of discharge. The school allowed more time than permitted to take the test, did not use all the required portions of the test, supply answers to students, allow students to discuss the answers among themselves, or pass a student whose score did not meet minimum standards. The test was not approved by the Department of Education, or the school failed to give a test as required. Okay, another type of forgiveness is public service loan forgiveness. The Public Service Loan Forgiveness is a federal program that forgives student loan debt for borrowers who work for a government or nonprofit employer. These include teachers, firefighters, nurses, military members, and other public service workers. So, this program also was recently extended temporarily due to COVID. Now they are going back and giving people credit for the time that they were not on this program. So, well, what the Public Service Loan Forgiveness Program is, you have to make 120 payments towards your loan. Now, if you're on an income-based program or an income-driven program, your payments could be as low as $5, $0, $20. It could be a small amount. And if you made 120 payments of that amount, the balance of your student loans will be forgiven. So, again, the program has been temporarily extended. The changes will allow thousands of additional borrowers to qualify for the PSLL for relief. And in fact, over 2.4 billion in student loan forgiveness has already been awarded to nearly 40,000 borrowers. But the changes to the PSLF are temporary and are set to expire on October 31st, 2022. Okay, another forgiveness program or discharge program would be the borrower's defense to payment. If your school misled you or engaged in other misconduct in violation of certain state laws, you may be eligible for borrower defense to loan repayment, sometimes shortened to borrower defense. This is the discharge of some or all of your federal student loan debt. Only federal direct loans are eligible for forgiveness under this program, and those loans must have been taken out for payment to the school that is the source of your claim. So, in this case, it says if your claim relates to federal loans taken out prior to 2011, they may not be eligible if they are part of the federal Perkins Loan Program or the federal Family Education Loan Program. However, you can consolidate those loans into a direct consolidation loan. You may be eligible for borrower defense to loan forgiveness. You can check to see if your student loans are eligible on studentaid.gov. So you may have a case for this claim if you were misled by a school about the education you received. Some examples: if your school made false promises about your employment prospects, the cost of education, or whether the school was accredited. By contrast, claims that do not relate to your loan or educational services are not eligible for borrower defense. This include personal injury claims or allegation of harassment. Your school does not need to have closed as a result of fraud. In fact, if your school closed and you are not able to transfer the credits, you should also apply for a closed school loan discharge. You can apply for both at the same time. If you think you may have a claim for loan forgiveness under this, there are two things to consider before you submit your claim. First, for your claim to be successful, your school must have violated a state law or certain federal standards depending on when you received a student loan. State laws vary, so check with your state attorney's general office to see whether you have a case based on the laws in your state. And we can assist you with that. If you choose to hire my company, we can assist you with that. We're familiar with the laws in all 50 states that impact this forgiveness program, but also all the information is available on studentaid.gov if you choose to file the claim yourself. Second, you should consider that if your application turns out to be unsuccessful and you did not continue making monthly payments while it was under review, your loan balance may have grown. Because of the recent changes to the review process, the Department of Education has a backlog of borrower defense applications, so it may take some time to give a determination about your application. The Biden administration has said it will begin to approve applications more quickly under its policy to provide full relief, but it's unclear how long it will take to get through the backlog. Once your application is evaluated, your student loans are placed into forbearance, which means that you will not need to make payments, but the loans will still accrue interest. That interest would be added to your loan balance if your application is not eligible for loan forgiveness and you are responsible for paying the full amount. Okay, so I went over 15 minutes a little bit, but I hope this video kind of helped everyone understand what their options are. All of these options, I can assist you with. If you contact me, I'll put my contact information at the end of the presentation, or you can go online to studentaid.gov for more information on these student loan forgiveness programs. Again, you can contact our team to schedule a consultation to help you negotiate and navigate your student loan debt. The initial consultation is free, and we only charge if we are successful at getting your student loans reduced or totally forgiven. Okay, again, I would like to thank you for watching this presentation. If you have any questions, feel free to reach out to me. You can contact me on Facebook. You can send me an email at info@thecreditgodmother.com. You can visit the website, thecreditgodmother.com. You can call me, text me at 901-633-7774. And also, again, you can contact me through social media. So thank you for joining me, and bye-bye.